Welcome to another corporate intelligence briefing. I'm super excited to have you here for this explainer. Today, we're diving deep into the PVC global market analysis for the first week of July 2026. We're going to take you from a 30,000-foot view of global PVC trends right down into the trenches of local procurement for this month. Whether you're managing a massive supply chain or just tracking commodity cycles, this data is absolutely crucial. It's going to give you the clarity you need to navigate the weeks ahead. Okay, let's dive right into this. On the agenda today, first, we'll tour the global bazaars from west to east. Next, we'll zoom in on the Indian bazaar. Then we'll check the buying pulse and market drivers. And finally, we'll wrap up by mapping out your purchasing strategy. All right, starting with section 1, global bazaars west to east. And the overarching theme here, high supply meets dull demand. So across the globe right now, we're seeing a very distinct slowdown. Starting in the US bazaar, the impact is obvious. The spot price just dropped $20 down to $670 per metric ton, FAS Houston. Why is this happening? Well, basically, sellers' warehouses are completely full and buying activity is just incredibly dull. When you've got a huge surplus of material sitting there and just crickets from buyers on the phone, well, price drops like this are literally the inevitable market response.
Jumping across the pond to Europe, the situation is equally sluggish. And, this perfectly illustrates the crazy dynamic right now between raw materials and finished goods. The ethylene July contract actually settled way lower, dropping by €200 to land at 1,445 euros per metric ton. But despite that massive feedstock drop, FDNWE prices stayed totally flat and stable at 995 euros. The driving force here is just overwhelmingly dull demand, which is keeping those spot prices stubbornly stable even when upstream costs are falling.
Keeping this momentum going, we hit the Turkey bazaar and the global slump continues. CFR prices there fell a sharp $75, bringing things down to $795 per metric ton. It's a familiar story, right? There is absolutely zero improvement in demand. And on the flip side, both domestic and import supply are totally ample. Buyers have options, and honestly, they're in no rush to use them. Wrapping up our global macro tour, we land in the Chinese bazaar. Unsurprisingly, we're seeing the exact same pattern. No improvement in demand. eWorks prices are holding stable to slightly lower, leaving spot prices hovering right around 4,700 yuan per metric ton. Now notice the procurement strategy here. Buyers are strictly operating on a need basis only. Nobody, and I mean nobody, is building inventory right now. They're simply buying exactly what they need for immediate orders and calling it a day. Now, before we pivot and really look closely at the Indian markets, I want to take a quick pause. If you're a professional trying to cut through the daily market noise, you can actually get these weekly reports and future trend predictions sent instantly to your phone. It's this awesome AI-powered WhatsApp chatbot. Just save the number, +91 93746 24365, and send the word PVC on WhatsApp. You'll get instant, highly accurate updates in about 5 seconds. It's a real game changer for keeping your finger right on the pulse of the market.
All right, moving on to section 2, zooming in on the Indian bazaar, where we'll unpack localized market mechanics for this week.
So that global supply glut we just tracked, it is directly impacting incoming material here. The latest Chinese PVC import offers for July 2026 shipments have definitely taken a noticeable hit. They're now sitting at around $690 per metric ton, CIF India. And as you know, this lower import benchmark really sets the stage for everything else happening domestically. If you are a supply chain or procurement manager, you might want to screenshot this next bit. The Indian Customs Department has revised the USD to INR exchange rates for customs valuation effective July 3, 2026. For imports, the rate is set at 95.20 rupees per dollar. For exports, it's 93.50 rupees per dollar. Having these exact figures locked in is absolutely vital for making sure your customs valuation and landed cost modeling are spot on this week. So the crucial point is this major local development right here. RIL has officially revised their PVC prices downward by 3 rupees per kilogram. And note, this is across all grades, effective as of July 2nd, 2026. Look, when a massive domestic player like RIL makes an across-the-board cut like that, it's a direct reflection of the global pressures and domestic realities we're unpacking today. Section 3, the buying pulse and drivers. Let's look at the market psychology and geopolitics. Now, what's really interesting about this is how the end consumer directly connects to the raw material trader. Overall, purchasing remains heavily subdued. Why? mostly because there's been a real retardation or slowdown in finished product sales. Think about it. When converters can't move their final goods off their own warehouse shelves, it severely erodes their raw material buying mindset. They're just not going to buy PVC resin if they can't sell the pipes, profiles, or films they're supposed to be making with it. Adding to this super cautious psychology is the broader global context. The recent geopolitical crisis has ended, and because of that, feedstock supply is suddenly free of constraints again. Now, we're just impartially reporting the data here. The sudden removal of these bottlenecks means material is flowing freely. While that sounds like a great thing, for a buyer, it actually creates deep uncertainty regarding future pricing directions. If supply is suddenly unconstrained everywhere, buyers naturally assume prices have further room to fall, so they wait.
Finally, Section 4, your purchasing strategy. Let's get into the actionable climax. We've tracked the global oversupply, we've seen the localized price cuts, and we understand the hesitant psychology at play. So, what on earth do you do with your capital today? This is the critical, high-stakes question on every trader's mind. When the ground is shifting beneath your feet, how do you step forward safely without locking yourself into a bad position?
Well, the logical conclusion drawn from the data we just went through is this. Due to the lackluster demand conditions we've tracked globally, from Houston to Europe to China and locally here in India, you should definitely expect local producers to seriously consider lowering their ex-works prices even further. Right now, the pressure is entirely on the sellers, not the buyers. Therefore, our definitive final verdict for navigating this first week of July is this. We strongly advise adhering to need-based buying. Basically, mimic the Chinese bazaar right now. Keep your powder dry. Only procure the materials you strictly require to keep your operations running in the short term. You absolutely do not want to build speculative inventory in a market where the momentum is clearly pointing downward. And that wraps up our strategic breakdown for today. For the complete, detailed PDF report, head over to www.polymerbazaar.com/futuretrend/PVC. You can also reach out directly via the website or at +91 937 542 4365. Make sure you subscribe and hit that bell icon so you don't miss our next explainer, where we'll be dissecting BOPP and other critical polymers. But before we go, I'll leave you with this final thought. If the global market is suddenly unconstrained and totally flush with supply, just how agile is your own procurement strategy to capitalize on tomorrow's inevitable price corrections? Think about it. Thanks so much for learning with me today, and I'll see you in the next one.